$46 trillion that sits in U.S. retirement accounts right now, over 99% of that money is actually invested in only publicly registered securities, no stocks, bonds, mutual funds. Yep. So what Rocket Dollar is a platform that lets people take those retirement monies, but instead of stocks, bonds, and mutual funds, if they know of an investment opportunity that happens to be private, they can facilitate and make that transaction. So the beauty of our platform is that people kind of decide what they want to invest in that's not public, because, I mean, you said yourself that you live up in the mountains in Colorado. So if you were eyeing an investment property somewhere outside the Denver area or somewhere closer to you in the mountains in Colorado, or where you have your place in Florida where you're at now, then you're much more equipped to know what might be an opportunity for real estate investment and appreciation than I would be. So we don't sponsor a fund. Ironically enough, we just give people access to their own money.
How does a broke single mom fired from Denny's go on to become America's most sought-after real estate investor? Well, that's why we have the most wonderful real estate podcast ever. Our motto for 26 is stack gold bricks in 26. I'm going to teach and share and bring you all kinds of great guests for season 8 in 2026. And we're going to learn how to stack gold bricks in 26. So you want money? We're going to get it. You want health and wisdom? We're going to get it. You want to learn everything there is to know about real estate investing? It's here. The most wonderful real estate podcast ever. Now on to the show. Hey, everybody. Welcome to the most wonderful real estate podcast ever. I'm your host, Dwan Twyford, and the podcast is the most wonderful real estate podcast ever. So I took my name, Dwan and Wonderful, and I made a new word, and that's how we came up with Dwanderful. So you're at the beginning of season 8. We are just this close from being away from 2 million downloads. So like, listen, share, subscribe. I'm just on the precipice of hitting 2 million downloads, which is super exciting for me. And again, it's season 8 and we're just here. We're having fun. I've got some super great guests this year, and we're just going to up our game and keep learning more and more about real estate. And again, you heard it in the intro. To find me, just Dwanderful anywhere. Facebook, Instagram, YouTube, Threads, just Dwanderful, and there's no place that I'm not. Let's just put it that way. So I've got a great guest today, very handsome man. I should have asked you to pronounce. So is it Yoshida? Wait, Yoshida?
Yoshida, that's exactly right. Yeah.
Okay, I should have just asked before I said so. Henry, I got Yoshida. Right. Okay, I actually have a lot of Japanese friends, and I don't know if you're Japanese. I'm just.
I am.
The name. Okay, both of my daughters speak fluent Japanese, and they travel to Japan all the time, and so I have a lot of Japanese friends. So I'm pretty good with the names.
Okay.
In Japan, yeah. So both my daughters in high school. You know how high school they give you like a choice to learn, like, I don't know, in the mountains where we live, it's the French and Spanish, and they wanted to take Japanese, so they got special permission. They went to a little community college and learned Japanese, and they've been speaking it forever and ever. They're in their late 30s now, fluent as they could be.
Wow, that's
fun,
impressive.
Huh? Yeah, that's fun. They love it, and I love I love everything about it too. So anyway, Henry, thank you for being on the show today. I'm super excited to have you. I'm excited to hear about your topic and to get to know you.
Sure. I appreciate you having me on. And, I talk a lot about real estate. It makes me think now that I need to go talk to my daughters. So I am Japanese American, but I was born here. And both of my daughters, they're trying to learn Japanese on Duolingo, but they're not fluent in any way. So I need to get them moving a little bit on that. So
yeah. And then my oldest daughter, when she got her degree, she has some kind of international degree. So she, for a long time, from America, would teach. She worked for some kind of school, and they would teach online and teach the Japanese kids to speak English. So she's been teaching, and they just stay up with it, and they go every year and run a Disney marathon, and just any excuse to get over to Japan, which I think is pretty cool, because we live way in the mountains in Colorado, in the middle of nowhere, and nobody up there travels or speaks anything, nothing exciting happens up there. So that's my girls right there. So okay, so Henry, thank you for being on the show today. So what we actually do is I just kind of throw my guests to the wolves a little bit. I just
Okay.
want you to tell us in like a sentence or two what you do and how everyone can find you across all the social medias. And then I've got some questions.
Okay, perfect. That was a lot of sheets of paper, Dwan. But myself, I'm Henry Yoshida, and I've been in financial services, both as a corporate employee, an entrepreneur for the last 25 years, and I specialize in tax-advantaged accounts. So currently, I started in 2018 a business called Rocket Dollar, and we're very much tied to real estate. We are a IRA platform that lets people open IRA accounts digitally on our website, keep the same tax treatments of IRAs and 401ks that you know, but instead of stocks, bonds, and mutual funds, our customers are able to purchase private and alternative investments. So real estate is about 40% of the $12 billion of assets that we have, and those are in tax-deferred IRA accounts. And then myself, it's pretty easy to find us. So we are at rocketdollar.com. So we own that handle on X, Instagram. You could find that on LinkedIn. I'm also there personally. I think I'm the only Henry Yoshida, although Yoshida is kind of the equivalent of almost the last name Smith or Williams in Japan. So it's unusual here, very popular over there in Japan. But I'm pretty easy to find. So Henry Yoshida or Rocket Dollar at LinkedIn, Instagram, or just rocketdollar.com. We have one of the main things that we did when we started the business in 18 was that our site actually started as more of an education repository for people who have questions about real estate investing using tax advantaged accounts like IRAs, and it's kind of grown from there. So we have upwards of 500 to 600 articles that get indexed pretty heavily, actually higher than the main website itself, for people looking for that information, whether they use us as a platform or not. But we're pretty proud of what we built. So we're 180 employees. Our trust is headquartered in the state of Nevada. Operational headquarters for Rocket Dollar is in Austin, Texas, where I'm at. And, we serve, again, customers all over the country, roughly totaling 12 billion, and about 4.5 to 5 billion roughly is actually in real estate right now.
Nice. I love it. Okay. So that was a really great, nice, simple, easy explanation. I love it when people can just do that and not end up going for like 25 minutes. It's like, I've got questions. We're going to get there. I promise you. All right. So, so tell me about the tax advantages. I think as a real estate investor, the thing we want to know is, obviously how to always pay less taxes.
Yeah. And remember, what usually ends up happening for us is that people who become our customers, they typically, if they want to do real estate using a Rocket Dollar IRA, they probably already own real estate, not inside of an IRA. They have experience being a real estate investor, whether that's on purpose or, you get a lot of the accidental landlords, they've kind of just moved from house to house and they just never sold the house that they moved from. I'm sure you guys have had a show on that particular topic before, but I think the problem we solve more is that at some point you run out of capital to continue purchasing properties. And when you look around, a lot of people have their accumulated monies in these IRAs and 401k accounts. So right now in the U.S., the number at the end of 2020, end of the third quarter of 2025, it takes them a while to count this because the number is so high, but there's close to $46 trillion in United States retirement accounts. So if you own real estate as an investment, outside of an IRA, you're used to being able to work and deduct all the expenses, take a depreciation. But if you own it inside of an IRA, none of that stuff applies.
That's right.
The only tax advantage there is that you end up purchasing the property, and whenever someone pays you rent to stay in said property, if it's in an IRA, that rental income is not taxable as ordinary income. It's kind of just given back to the IRA and there's no taxes on it. So there's no depreciation, none of that, because it's inside of an IRA. There's no capital gains inside of that account. So what we really found is that most people are using their IRA to purchase real estate because they have additional monies there. They want to purchase more properties. It's just that that's where the capital's at this point. So they end up using that. And then now you have a different set of tax advantages, which are that there's no taxes on any rental income stream that comes in on the property. And then there's no taxes on that gain of that property either until you start to take money outside of the IRA. And if it's a Roth, then there's no taxes whatsoever at all. So the income will come in, you'll accumulate that cash, the property will increase in value over time. And when you sell it, there'll be no tax on the gain of that property in a Roth IRA. So that's a pretty powerful tool for a lot of people.
It is very powerful. So you all allow people to come in and set up an IRA within your company.
Mm-hmm. Yeah, so we are an IRA platform. So no different than the IRAs that you'd have through maybe like traditional brokerage providers like a Vanguard or Merrill Lynch or Vanguard or Fidelity, or one that you would get to a financial advisor like Merrill Lynch or Edward Jones. So we're no different. It's just that our IRAs are built for people to own private and alternative investments, of which real estate is one of those asset classes.
So what are some of the other asset classes?
So other ones that we've seen, and we have about 9,000 registered different investments, but the most popular categories are real estate, number one. Number two is actually just a limited partnership investment. So you just basically write a check to become a investor in a private fund. And that fund could be in private equity for companies. It could be in private equity for real estate. Real estate syndications are another big one. So when I say real estate, I'm talking about just a directly owned real estate. So another segment of our customer base actually does investments into things like syndications, or they even do hard money lending. That's another asset class. So really, like, think tangible things. They can invest directly in a small private company. They can invest directly in real estate, of which we talked about, or they can become a limited partner in a private non-registered fund. And that fund can invest in anything from companies to real estate. And then probably on the other side of the spectrum, if we're kind of looking at investments from like a tangible, lower risk, more understandable type of asset class, the other side of the spectrum could be crypto. So that's actually our third largest asset class overall, is digital assets and cryptocurrency, because I think on that side, there's high potential for return. So people will put money that's earmarked for long-term investing, which is what your IRAs and 401ks are, with great tax treatment, and maybe just kind of make a bet today in 2025 or 2020 or 2015 that it'll be worth significantly more, and you want to minimize the tax burden on that in an IRA account in the year 2030, 35, and 40, and 45. And
That's
beyond.
right. So obviously people should do IRAs and they should always do things like that when they're younger. But can anybody come along at any age and go like, hey, I'm 50 years old, I'm going to need more money to retire with. Let me get inside this IRA over here and put money in, be a part of a fund, be a part of something. So
Sure.
At any point, someone can come to you, open one up, and is there a limit on the amount of money? I know there's a limit on what they can put in. But if
There are limits. They're pretty low.
They can keep dumping that back in.
Exactly. And, our typical customer is we're probably not someone's first IRA account. So you're right. So if we get back to all the advice that we would tell ourselves, or what we spend our time telling our adult children or nieces, nephews, like anyone sort of starting out in the working world, we might say that, hey, look, always do that, put away some portion of every dollar you earn towards savings and investment inside of a tax efficient account like an IRA. If you work for a company, you do that into a 401k. So what our typical customer is maybe more along the lines of mid-career, where they've actually had some monies accumulated in these accounts through their jobs. The IRA contributions are pretty low, so most people accumulate more money quickly in larger amounts in a company-sponsored 401k. And as they move from job to job through their career, they accumulate monies, and now they have an amount where they're uncomfortable with 100% of that money being, let's say, inside of just an index fund tied to the S&P 500, the 500 largest public companies. They want to diversify a little bit. So they would take a portion and open up an account here at Rocket Dollar and then move existing IRA or old 401k money into that. So we're kind of set up not really as a starter account. I think there's other providers out in the marketplace that really let you start an account at zero. We kind of liken ourselves as maybe where you'd go if you're looking to diversify your existing IRA and 401k money, and you have at least a $10 or $15 or $20,000 private investment first time to make. Obviously, if you're purchasing something like real estate directly, you'd have to have a lot more. So this is someone who might have accumulated $500,000 and decides to take $250,000, move it to a Rocket Dollar IRA from their Fidelity IRA, and then purchase an entire property outright, just as a way of diversifying and or a way to own something that's more tangible to them. in the form of real estate versus a digital piece of paper, which
Yeah, I
represents
love
ownership in
that. I
stock.
love that because I know, I mean, I've been investing for 35 years. So I just remember way back, like maybe in the 90s, people were talking about if you have an IRA, move it into, I think, and I'm maybe forgetting this because it's been decades since I talked about it. Like move it into a Roth or something where you can take it out, take some money out, put it down as an investment on a property, sell the property, take the profit, put it back in. And people were starting to like, oh, I can use that money to invest in other things and then put that profit back in there, which allows a higher amount getting put in on a yearly basis. But I seem to remember, like, I don't know what kind of IRAs were coming around at that time. And a lot of people were switching out, at least the people I knew, into
Mhm.
things they could use to invest with.
Okay. Well, so once money is inside of a 401k or IRA, they kind of stay in those types of accounts. That's how you keep that sort of tax shield, and you're able to continue growing all those monies until uh, uh, age 59 and a half. I don't know how they came up with this number, but it's always been 59 and a half for the entirety of since I've been working with these accounts, and that was starting in the year 2000, in 2001 timeframe. But after 59 and a half, then you're able to take money out, probably to what you're talking about, and just pay taxes on the exact amount that you take out. So even if you have a $500,000 account, and you decide to withdraw $100,000 to go do something with it, then you would only pay tax on that 100,000, not on 500,000, because that's the amount that you took out. And what we found is that people like to leave monies in these accounts, and then there's a different age to where when you turn 72, you have to start taking money out of the account because at that point, the government realizes that you're closer to dying, and they've never received any tax money on it. So then it's a pretty, I guess, draconian term, but it's a required minimum distribution. But really, it's that at this point, you're expected to only live for 10 more years. And you haven't paid any taxes. So we are going to require you to take some money out every year for the next 10 years until we think you're going to die on average.
Death and taxes, death and taxes, death and taxes. And again,
Yeah, and this is where they're combined to each other. So they realize that, okay, now they know that you're going to die, but you haven't paid taxes. So now they're going to make you pay taxes knowing that your death is imminently coming. So
I know. I'm turning 67 in a couple of weeks. It's like, golly, 67. I don't even know how that happened that I got that old. It's like I'm way closer to the end now than, I used to be. And for some reason, this is the first year I've actually thought about like, wow, 67. My next big birthday is 70. Like, how many big decade birthdays do you have after that?
right.
Maybe an 80, maybe a 90, but it's like, I've had 60. So
I'd probably say 100 and 110. So
I don't know. I have really super longevity. My aunt right now is 99 years old. She lives in Tennessee. She walks 2 miles a day. My mom is 89. My other aunt is 87. My aunt that just passed away was 102. So there's like
wow.
super longevity on my mom's side with all the women. So I'm hoping I inherit that.
Well, I think you're well on your way. You look young, healthy, like you're going to go walk 2 miles right after this show. So
I do. When I'm in Florida, right? We have a house in Florida. When I'm in Florida, I walk like 3, 4, 5 miles a day. Then our other residence is in the mountain mountains, the 8,000 feet in Colorado. I go out there to walk like a half a mile. I'm just like altitude. So I don't exercise as much there because the altitude is like murder. But down here,
right.
I'm like paddleboarding and bike riding, and I'm running every day. And then I get back up there and I become like a house hermit. So now you guys, so your fund is taking the money that everybody's paying in and doing investor funds, doing syndications. So that is how the money in there, opposed to I know some IRAs just work like off the stock market or the markets and things. Your fund is investing and doing things in the hard money, giving loans. The fund itself, giving loans. Doing
we don't manage the funds themselves, so we just provide the platform. So ironically enough, that when I started the business, we kind of are in the business of giving people access to their own money, because as you mentioned just a second ago, that of that $46 trillion that sits in U.S. retirement accounts right now, over 99% of that money is actually invested in only publicly registered securities, stocks, bonds, mutual funds.
Yeah.
But So what Rocket Dollar is a platform that lets people take those retirement monies, but instead of stocks, bonds, and mutual funds, if they know of an investment opportunity that happens to be private, they can facilitate and make that transaction. So the beauty of our platform is that people kind of decide what they want to invest in that's not public. Because, I mean, you said yourself that you live up in the mountains in Colorado. So if you were eyeing an investment property somewhere, outside the Denver area or somewhere closer to you in the mountains in Colorado, or where you have your place in Florida where you're at now, then you're much more equipped to know what might be an opportunity for real estate investment and appreciation than I would be. So we don't sponsor a fund. Ironically enough, we just give people access to their own money. So one of our taglines is that we help you unlock your retirement money to go do investments that your other providers won't let you do. So that could be real estate, crypto, or invest in a private company, or in a syndication for real estate, or you could do hard money lending yourself. So one of the largest uptick categories that we have
that. I don't know any other fund that does that. So this is really great. So I didn't mean to interrupt you. So I'm in there and I say, hey, I've got all this money in there. I would like to do some hard money lending. Do I find the people to lend the money to, or do you find the people?
You would find the people, because you probably want to lend money to people that you trust. Like, let's say a developer you've worked with and you know that, hey, they're good for this. And, it just happens to be that they're at the cap of what they can get from the normal bank channels right now, but they need another $200,000. So you would negotiate yourself a contract with that individual. Let's say, I don't know, probably the going rate right now, just using today's early 2026 numbers for a hard money loan on 14 to 18 month term might be 13 to 17%. Yeah. And you negotiate that. You provide us that paperwork as your IRA provider. We basically then see the paperwork and we disperse that money to the person you're lending money to. And then as they make payments back, the interest payments and then the principal later, that goes back into your IRA. And the beauty of that 13 to 17 is that since you did it inside of an IRA, it's actually tax free. So depending on what your tax rate is, that real return could be 17% divided by 0.7 if your tax rate's 30%, and you're effectively making a 20.5 or 21% rate on that money, not 17, because you're not paying taxes on it.
No, I love that. Yeah, I don't think I'm familiar with it. I mean, I just don't think I'm familiar with anyone that has a fund like that, like what you guys have. Like, this is like the thing all real estate investors should be putting their money into.
Well, and it's been around. So ironically enough, this has been a capability that's existed since the beginning of IRAs. So IRAs were created in 1974. So they're a little over 50 years old here in the US. That's the same law that created 401ks. But it's just that the industry that came up around it were companies that specialized in providing stocks and creating and selling mutual funds. So they really didn't want to give access to allow people to take their IRAs and 401k monies to invest in something that's not a stock, bond, or mutual fund, because it'd be, I kind of I use the analogy of that Trader Joe's and Costco basically make a living off of selling a lot of their private label items inside the store. It doesn't make a lot of sense for them to have 90% of things that aren't their brands in the store. It's 90% of things that are their things inside that store. So the reason why you buy stocks, bonds, and mutual funds, or the average American, for the most part, buys stocks, bonds, and mutual funds inside their IRA at Fidelity, Vanguard, Merrill Lynch, Edward Jones, you name it, is because those same companies are also in the business of creating, manufacturing, and facilitating the sale of stocks or mutual funds or bonds. So they really don't want you to buy a single family home outside of Orlando, Florida, for example. Yeah, they don't make any money off of that. The money would leave their IRA and go into that. So that's why we ourselves are just a facilitation platform. So we're an IRA platform. People find their own investments. And, when I told you earlier that 99% of the money in U.S. retirement accounts are in stocks, bonds, and mutual funds. Well, if you look at what they consider, quote unquote, the smart investors. So think like college endowment funds, municipal retirement systems, and pension plans and so forth. What you're going to find there is that 50% of the money that they have to invest is not in public investments. They're in private investments. They own, ironically enough, buildings, they're limited partners in private equity funds. So we make the average American person able to access an account of money or a pool of money that they already have with long-term treatment and great tax advantages to go do private investments the way that the biggest and baddest investors in the world do right now. They've always been a 50-50.
Hey, time for a 2-second public announcement. How would you like to have a 45-minute strategy session with me personally, and we can sit down and discuss, and no strings attached, what your real estate investing career can look like in 26 as we stack gold bricks in 26? Go to Dwanderful, Dwanderful, Dwanderful.com. Take my real estate investing quiz. Schedule a 45-minute strategy session with me personally, and let's see what we can do to get you going on the right track. Now, back to the show. Now, I know that none of these funds can ever guarantee, a guaranteed interest rate per year that you're going to earn. And I think don't most of the big giant mutual funds, don't they average like 7% a year or something like that?
Well, that's the weird thing. So
based on what's going on, who's president, who's getting bonds.
Yeah, that's if you take all of them. But there's mutual funds that invest in all different things. So some that just invest in international stocks, some that invest in only United States large companies, some that invest in only bonds. So just take an average of all of them is not really an accurate way to say it. It's just you're just picking the flavor or the style that you want. But I think that what Rocket Dollar represents is the ability for people to have more control over what they want to do with their money. And then of course, if you lend it to the wrong person for a hard money loan, it goes defunct, that's on you. But you're discovering and finding things that you're more comfortable with. So your audience, after 8 seasons, it's the Dwanderful Real Estate podcast. And there's a lot of people who listen to you who realize that, hey, I'm much more comfortable investing in the things I know, the things I can go see, the areas I'm comfortable with versus, let's say, blindly putting money into a mutual fund concentrated in large United States company stocks, which right now are largely concentrated from a return standpoint in the largest technology ones. And although I may see a couple of Teslas driving around on the road, I don't really have any sway in what that company may do. I've heard of this company, NVIDIA, but I don't know what they do because I'm not in tech,
right.
and so forth. But people, our customers tend to like the more control that they have, like the ability to control their own monies that they already have to go into investments that they feel more comfortable with. That's I think what we represent at Rocket Dollar.
Yeah, no, I really love it. I mean, you are actually the first person in the entire 8 years of my podcast that I've interviewed that does this, Rocket Dollar, first of all, and that I've talked to that actually has a fund that is more, like you said, like real estate, more kind of based like that, opposed to the average, whatever everybody does. And of course, I interview people all the time that have syndications. There's a million of those too. And I like the idea, like if I had my money in there, I would like the idea of being able to do various things with the money. Because at this point, people already have the money in there. So It's not like they're coming in saying, okay, here's my $100. What can I do? They're already in, they've got some money, and they hopefully have gained some knowledge, or they've been following me for the last 8 years, and they know everything about real estate investing, and they can take that money and they can do things with it.
Exactly. And I own a condo in my, Rocket Dollar account. So I own private investments. I'm invested in a couple of companies. I own a real estate. I just listed it for rent right now, actually, January 15th. So 5 days ago.
Nice.
Listing went live. Yeah.
Nice.
For a property that I own inside of an IRA.
Yeah, I have a bunch of students that started off as just students wholesaling houses, flipping houses, rehabbing, and then they made a lot of money, and then they, bought some with their IRA, put the money back in, and now they're hard money lenders, and they're lending from their IRAs, and they're just like, I can't believe I learned how to do this from you. And I'm making so much money, and they're just like making so much more because they're lending the money out of their IRAs. But I know this one, it sounds like it's an easy way to do it.
We are an easier way. When I started the company, so my company prior to Rocket Dollar was another technology platform. It was acquired by a Wall Street firm. And when I started Rocket Dollar, the thinking here was, how do I make it as easy to open an IRA as it is with these traditional incumbent providers? Like, in other words, trying to put myself in the position of the customer and thinking, what are the expectations here? So the expectations are, and we've achieved this, but that you can go to rocketdollar.com and you can open an account in 7 screens and 8 clicks in less than 3 minutes, provided you know your address and your full legal name and so forth. Some people, maybe a little slow on those kinds of things, but if you can do that, you open an account right away. And then once you have that account open, you have the ability to digitally begin a transfer of some monies in your IRA account at Fidelity, or you have an old 401k from a job that you left in 2020, but you were there for 8 years. So you know that there's about $250,000 in that account or $100,000 in that account. And it's just there. And you haven't worked at that company now in 5.5 years, but you move that over to the Rocket Dollar account. And when it gets here, it's your IRA money, and you could go provide a $100,000 hard money loan at a 14% interest rate to a developer who you've worked with in the past, who has had like every deal go great for them, that they're going to be good to pay you back. This is a 14-month term, 14% annualized interest. And again, if you're doing it inside of your IRA, this is not taxable money. So your real return is beyond 14%, depending on what your tax rate is. And that's kind of a nice ecosystem, because this actually kind of takes maybe that bank channel out of the equation, is helping that developer get their project done, and then helping the investor, client, customer of Rocket Dollar actually get closer towards their retirement goals. And that's kind of that synergistic circle that we try to create.
I love it. I think it's great. So we're going to switch topics for a minute. I always like to talk to people a little bit and get to know you personally. So tell me, what is your favorite band of all time?
My favorite band of all time. So I got to think about this. So it's kind of nuts, but given my age, so I really liked, I'm about to turn 49 here in a couple months. So I think for me, I really like those bands back from like the 90s and 80s, like that Depeche Mode style. So that music kind of went away. And it was a little bit before that sort of 90s grunge, which oddly enough is what my 15-year-old daughter is into now. It's like 90s Nirvana, Green Day.
I know. I love Nirvana and Green Day. I'm such a big Green Day fan. It's crazy. So we're going with Depeche Mode.
Yeah, I'll do that then.
I know, that's a fun band. I always tell, I like to ask people, what they do, what do they eat, what do they listen to, because you can just tell a lot about a person from their music, their genre, how they were raised, what they've got, what they like. And I always find, Henry, and I'm sure you'll agree, is that people want to work with people that they like and they have things in common with. And someone's going to hear this today and go, oh man, I love that kind of music he loves. And, I love all that. I love that. Let me go check this guy out. So what's your favorite food?
So my favorite food, I answer this differently. I always think to myself that if I could only eat one meal for the rest of my life, on repeat, just if I had to, what would I eat? So it'd probably just be top sirloin steak and fried eggs, because I figure that I could survive for 50 years if that was the only thing I could eat for the rest of my life.
It's true.
And I eat a lot of that now. So
yeah, I'm actually, I started on the carnivore diet. In December, I have an autoimmune, and I started having a bunch of flare-ups and a bunch of stuff. And some people that have autoimmune diseases were saying, hey, sometimes do like the carnivore, gets rid of the sugar and the carbs and gets a lot of things out of your system, helps with inflammation. And I'm telling you, I can't believe how much better I'd feel eating like that. And then, of course, plus sides, I lost 15 pounds, which I was not doing it to try to lose weight, which for real, because, women are like, I'm going on diets. Like, no, I just want to try to feel a little bit better. But those couple of weeks when you first start off and you're like, really like steak and eggs, meat and stuff, you go through the whole withdrawals of the sugar and the carbs, and you feel like you got the flu, and you're just like, it's terrible what it does to your body, all that stuff.
Yeah, well, it's just, I think you're more getting on the just eliminating things that are processed, and like, what is it? If everyone in the country, right, and they just recently flipped that food pyramid upside down to change it, but if 90% of the food you ate had 3 ingredients or less, you'd probably be a lot healthier. And save a lot of medical bills. So.
Yes. So I'm eating a lot of steak and eggs and hamburger and eggs and so much salmon and stuff. And it's just like, I feel a lot better getting all that crap out of me. I'm
not having lunch today,
anything sweet or sugary. I'm having nothing, no carb, nothing. It's like, it is amazing. So,
exactly.
So I want to ask you 2 more questions. So
Okay.
one at the end, because let's see where we're at with our time yet. So at the end of every show, I always like to ask my guests to leave us with a word of wisdom, but I just want a single word, like one single word.
Curiosity.
Okay, now don't say anything yet. Curiosity. Okay, so curiosity is so what we do in the Dwanderful world is I tell everybody every week when you hear my guests, they're going to give us the word of the week and they're going to put it on a little sticky and you're going to put it up there. And every time you brush your teeth, you're going to be saying curiosity and you're washing your face. Curiosity. That's our word for the week for everybody. So now that we know what the word is, what does curiosity mean to you?
Just don't accept things at surface level. If people tell you something, you got to try to learn the context or learn what's behind it. So again, we just mentioned that, hey, if you eat steak and eggs, you might get rid of inflammation. But, the curious part is that you got to kind of find out why. Or in my case with my business, right? It's that I've done well accumulating monies in a regular 401k in the stock market. Why would I diversify away and open a Rocket Dollar account and buy real estate? Well, then you'll start going down this path of maybe learning about diversification, or that although the stock market on average has gone up by 8 to 10% a year for the last 90 years, there have been periods where in a single year it'll go down 20 to 35%.
Oh, yeah.
And that happens every fifth year. So
the thing is, I really like that word because I feel like a lot of people are not curious enough, just in life in general, to go out and learn new things and have new experiences and try a new food or travel to a new place or invest in something different because people are so locked into, I have to do this for this many years and retire and work for the man and da 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 da. And I feel like people have kind of lost that like childlike curiosity that we all had when we were younger.
yeah, exactly. And it's kind of weird because we're in a position now with technology to where we can find the answer to everything, but we know less. We can talk to anyone in the world, but we're less social.
I know, isn't that crazy? It is so crazy. Okay, one last thing. So people that have listened, they like this, they're like, hey, I really like this guy. I like the Rocket Dollar. I like all that. What is the very first step somebody would take to take action with you? What's the first thing that somebody needs to do?
So first thing that they would need to do is probably begin to identify, is there some sort of private or non-public investment opportunity that they like? And if that is the case, then it might be going to our website and explore opening an account or talking to one of our folks. One of the things we have, although it's 2026, is that we have a phone number on the top right-hand side of our homepage website. And we answer that phone basically during business hours, Monday through Friday. And it's not a sales line. It's just an information line. If you have questions about how these accounts work and so forth, this is a new concept to people, but it's existed for 51 and a half years. And so we're happy to answer questions about that and just help folks get comfortable and help them understand that probably investing in alternative and private investments like real estate and an IRA seems unusual today the way that owning an individual stock might have seemed unusual in the year 2000.
Yeah.
And now a lot of people own an individual stock.
Yeah,
They don't
no,
need to be a
I
Wall
love
Street
it.
expert.
And the thing I love is that you have someone that can talk because, so I'm 66 right now. And when I want information, I mean, I'll Google, I'll do all the things. But if I was going to come over to Rocket Dollar and I had questions, I would actually want to talk to a person and not be in a chat room, a stupid chat box.
Yeah.
So it's like, just let me talk to a person so I can ask my 3 or 4 questions like directly and I can move on to the next thing.
A chat box that is not a real person because they can
Oh,
type
they
so
drive me
nice
crazy.
and
They're like,
fast.
you
And
want
you're
to know, and
like,
they give you 15 choices. I'm like, listen, just give me a freaking person.
yeah.
Just want to ask for some questions. I don't want to go through this 80. I don't want to figure it out. So ask the questions so I can move on. So
You want to know something funny? So we've had people call our line recently, and one of our folks will answer, like a Tristan Keaton will answer, and one of them was telling me that the person actually was accused him of being an AI. So he said, "Can you prove that you're not an AI like answer person?" And he said, I don't know how to do that. And he said, okay, you're a real person because AI wouldn't have said,
that's so great. I know AI, I love AI, but I don't know. I just feel like you just said, people
But
are
they expected it to
listening.
be a robot that actually answered the phone. So
I've had people call me before and after a couple questions. I'm like, are you a person or am I talking to? And no, I'm a person. It's like, oh,
Okay,
wait,
so
a
it
real
does happen.
person.
All right.
See, people do like that. Okay, so everyone, I want you to go to rocketdollar.com. Henry, this has been super informational and it's been super fun. I like your music, I like your food, I like what you do. I like the fact that it's really good for real estate investors. So all of you out there, this is a great way to grow your money. You take the money out, you invest it in something, and then the money and the profits, and it all keeps going back in, and you can really grow your wealth a lot if you're using the right kind of an IRA. And I feel like this is the answer that a lot of you have been looking for. So I'm really excited to promote what you're doing because I feel like you feel a need for all the millions of investors around the country that want to do something that's not like this. They want something different. So I feel
Right,
like
exactly. And
you feel a big hole that we need.
well, hopefully, a lot of your listeners, they probably have a lot of monies accumulated in these accounts and they just assume they can't use it. So,
They do.
if nothing else, to go on to a show like this and it just opens the eyes that maybe there's a pool of capital that the average everyday American has access to that they didn't think they could use for investments into things like real estate. They thought that they could only keep it at this brokerage house and invest in these mutual funds or public stocks only.
They do think that. I have so many new investors that even like when they want to pay for like my mentoring, they're like, oh, I can pay for that with an IRA. I'm like, yeah, you can use that money for all kinds of stuff. And a lot of people just regular run of the mill, they don't know that they can invest and do things like you just said. So this is a way to really grow your wealth and keep away those Uncle Sam taxes for as long as possible.
Exactly. That's right.
Okay, everybody. So thank you so much for being here. If y'all had fun, if you listened, if you learned anything, I want you to do me a favor, subscribe, leave a 5-star review, keep sharing, help me crack 2 million downloads. We're like this close. And I can't do it without you. So we'll be back next week, same bat time, same bat channel. And remember that the truth is in the red letters. All right, everybody. Thank you. Goodbye. Have a good week. Mr. Henry, thank you so much. You are just darling.
Thank you.
Hey, folks. Thanks for tuning in to the most wonderful real estate podcast ever. Don't forget to go to Dwanderful.com, take the quiz, schedule a strategy session, watch all the podcasts, and be a part of this year. This is a really important year. We're stacking bricks in 26, and I want to help you stack as many gold bricks as you possibly can. That's only going to happen if you subscribe, leave 5-star reviews, stay tuned, share, and just let everybody know about the wonderful world of Dwanderful. And I'll see you next week.